So please now just listen, okay? I'm just going to run through the project, okay, once again and complete the project in whatever time we have got today, okay? So basically, we're talking about there's a new project. So anytime you're supposed to make a new project, fine. So you have to decide what are you going to do. Basically, either you're going to provide some services or some going to manufacture some product or going to trade in some product. Now, yesterday, I got a feedback. There were some companies who came and they wanted to know how do we forecast the revenue or sales of a company. Okay, particularly a service industry. It's much easier to do a forecast for a manufacturing or a trading company. Okay, but it's difficult to forecast a company like a banking or a telecom company. So I'm going to give a guest lecture next week on Tuesday in FIB on that subject. So I don't know whether you are there or not. Okay, fine. So let's talk about this case where this company is going to sell computer instruments. Okay, they are going to sell desktops, laptops, and workstations, and the price fixed by the company for the first year is 20. They are going to sell the desktops for 25,000, laptops for 50,000, and workstations for 5,000. And their installed capacity based on whatever machines, equipment they have bought, and how many people they have deployed. So their installed capacity is 3,200 for desktops, 1,200 for laptops, and workstation they can sell 2,600 or manufacture. And they have a capacity to make 2,600 workstations. Now, for doing this, they have a plan. The source, where they are going to put their money. They are going to make some investments. Okay, they are going to buy a plant and equipment and machinery, which is will be 400 lakhs, and some office equipment, vehicles, furniture fixtures, so totaling to about 5 crores. And they plan to raise, 100 crores or 100 lakhs from, rather it's 500 lakhs, okay, or 5 crores, okay. And they are going to raise an equity of 1 crore and another 500 lakhs of 5 crores from, they're going to take a loan, okay. Yeah. So, as I told you that they fixed the selling price for the three products and the cost. I have already discussed about the total cost, how cost is working out. I'm not going to take you through that. The cost is 11,250 for desktop and 21,000 for laptops and 2,000 for workstations, which means they are going to make some profit on that. So the markup is 55% on desktop, 58% on laptop, and 60% on workstations. So, so let's move on first to the income statement, and we'll go through how we have done it. So, so what I have done is basically we have prepared the projections for the year 1, year 2, year 3, year 4, and there's a 5-year projections we are supposed to make. Okay. So in the first year, first I'll take you the summary, and then we'll do how we have done these projections in a detailed month by month projections. So in the first year, the total sale of desktops is 1 crore 56 lakhs. Okay, they are going to sell 624 desktops at a price of 25,000. Okay, so that means their total sale will be 1 crore 56 lakhs from desktops. Similarly, for laptops, they're going to sell 240 laptops at a price of 50,000 rupees per laptop. So their sale will be 1 crore 20 lakhs. Similarly, for workstations, they are going to sell 780 workstations at a price of 5,000. So that means the total sale for workstations will be 39 lakhs. So totaling to 3 crore 15 lakhs the first year turnover of the company. Okay, fine. So now going back to the cost of goods sold, basically it has been calculated on the basis of the markup. Okay, if I just show you this calculations here month by month. So what we have done is we have put a sales plan in this format. Okay, so the total sale for the first year is 3 crore 15 lakhs as we have seen in the summary. Now we are assuming that they will be doing equal monthly sales of desktop, laptop, and workstations. So what I have done is they go back to the just to show you how the calculations have been made. So if suppose I take this number 1 crore 56 lakhs, which is an annual sale, and divide by 12, so it comes to about 13 lakhs. Okay, so that is the number which I have taken here, which is 13 lakhs. I'm assuming for a very simple reason that the sale will be constant throughout the year. But of course, in actual, it may not. So you can always make changes, but this is just an explanation to show how the projections have been made. Okay. So you can always, show a little less here and then ramp up and make your total, sales to 1 crore 56 lakhs. So you can even do that. Okay. Uh, Fine. To just keep the calculation simple so that we understand the whole, how the projections have been done, we have kept a constant figure every month. So similarly for laptops, 10 lakh rupees sale per annum, going up to 1 crore 20 lakhs. Then workstations, 3 lakh 25,000. So that means total sale of workstations will be 39 lakh. These numbers have been actually been copied and pasted here, which is, in the this number. So the total sale is 3 crore 15 lakhs. Is that okay? For the annual sales of the company. Now, what I have done is basically I have, put a markup in my cost of sales, cost of goods sold. So this is a cost of goods sold format, month for laptop, everything. So all the products of the company. So what we can do is that, we can just fix up. So this is a formula driven Excel sheet where I put the markups. Okay. 55% for the desktops and 58% for laptops and 60% for workstations. So the moment you put, you will get these numbers will get populated. So your cost of goods sold will come month by month. Information will be available in this template. Okay. So what I have done, I have just put this number here in a summarized fashion. So my cost for each product is given here, which is based on the markup. Okay. So the gross profit is 1 crore 14 lakhs. That means sales minus the cost of goods sold. Is that okay? Then, for if you move year by year, so sales and personnel expenditure, which I've shown as 15 lakhs 75,000, which is basically, based on the formula, which will, I'll take you to the Excel sheet here. So we go to the profit loss account here and go right at the beginning. So sales and personal, this is the first line item in our profit loss account. So which is, which is showing a figure of 1,31,000. How I have done it, I'll just show you once more. So I just, we have taken an assumption that the sales will be 5%. Okay, the the expenses which is shown here, which is salesperson and sales personal remuneration will be 5% of the sales. Okay, so that is what we have assumed that this much of the expenditure will be doing uh, on the basis of our sale, how much cost we'll be spending on this line item. So similarly for other personal expenses, I'm going to spend 50,000 rupees. Okay. So other personal means expenses for keeping some more guys who is going to help the company. Okay. Then rent and other shop expenses. Okay. There I have kept 1 lakh rupees at the beginning. Maybe that it is this rent was paid partially for the month, so some assumption there, and then it goes to 2,20,000 rupees per month. Okay. The rent which is paid for the premises of the place where you're going to keep uh, your all the products and sell them, and all your people will be deployed there. So this is the rent you are paying for the shop as well as for the premises, office premises. Then the marketing cost, again, it has been kept as 5% of the sales. Okay. Then other selling expenses have been kept as 0.25%, as you can see the formula at the top. Okay. So this is your sales into 0.25%. So that comes to basically 6,523. Then administrative expenses are 1,25,000. So this is an assumption that I'm going to spend 1,25,000 on administrative expenses. Okay, fine. Of course, you can do all kind of detailed, analysis on what kind of cost will be there in administrative and put it here. So this is basically to give you a complete idea about how the projections are made in a nutshell. So because we're going to talk about the balance sheet, profit loss account, cash flows, and again try to value this company also. Fine. So the whole purpose is to keep it simple. Okay. No, don't go into much of details as far as how the expenses have been kept. So then other administrative cost has been kept as 15,000 rupees per month. Okay. So if you just take all these costs which are coming on the year one, okay, and take it to the sheet here. So you'll find the sales and personal administration cost. So this file has been linked actually, okay, with that file. So 15 lakh 75,000. So this way all the expenses. So your total, expenses, selling and general administration expenses are 83 lakhs 58,000, which is the sum total of all the expenses. Okay. So which means the company would be making an EBITDA of earning before interest, depreciation, taxation, and amortization, before depreciating the assets. Okay, before paying any interest. So their total profit is 30 lakhs, which is which is basically, if you look at the formula, it is 1 crore 14 is the gross profit minus the total expenses. So EBITDA, if you look at the formula here, so okay, so sorry, the formula is here. So this is basically your gross profit minus the total expenses. All expenses, sales and personnel expenses, rent, marketing cost, everything included, all the costs to do sale, to do all this sale. Okay. So the total EBITDA is 3 crores, 30 lakhs. Okay. Then the depreciation. So for that, what I've done, I've taken to the, if you go to, if I'll take you to the main sheet here. So the capex, right? So company is going to, invest money in plant and equipment, machineries. Okay, so they have bought, 4 crores of main plant and equipment, and other equipment for 1 crore, includes all your furniture, computers, and everything. We have assumed, for simple reason, we assume the life of all the assets is 10 years. Okay, and assume the straight line depreciation. Okay, so the depreciation has been calculated at the bottom, which is going to be 4,16,000 rupees per month. So I have kept it the same. And since we have not taken any further equipment for another 5 years, so depreciation will remain constant for all the years. And go to the financing side now. So we have, the company has taken a loan of 4 crores. Okay. And at the start, and then, another 1 crores in April. So they took a loan of 4 crores in the month of March, and 1 crore in the month of April. Okay. And they, taken a loan at a rate of 7%. Okay, fine. So this is the interest what they are going to pay. So interest will get populated automatically month by month, which is going to be 2,91,000. So for the whole year, it comes to 35 lakhs. A company, I have assumed the company is not paying the loan, repaying any loan, any principal for the first 5 years. Okay, so that means we will have only the interest will be remaining the constant for all the 5 years. So you can always make some assumptions where the loan gets paid, okay, at any given point of time. So let's go back to this information here. So which means, now we will have interest expenses in form of loan the company has taken. How much loan company has taken? 5 crores. 4 plus 1. Okay. So this is the interest which the company is going to pay. And similarly, there will be some depreciation also. Okay. So which has been coming here. So depreciation starting from the second month. So in the year, when in the month the equipment has been installed, there is no depreciation. It starts from the next month onwards. But we could have started even for the first month, because we are making a sale right from the first month. So that means the goods are being produced and sold. Okay, so we can change this assumption and start our depreciation from the first month itself, because we are already using those equipments. Okay, and selling from the day one. So let's go back to this statement again. So this is just a summarized version of what I have done in detail in my Excel sheet. So now the company made a loss of 50 lakhs in the first year, as per the projections. Okay? पहले साल में first year the company is not making any money. Okay, so because their expenses are more and their sales is less, or the gross profit, then that means they'll make a loss of 50 lakhs. Okay. So iske niche I have just calculated cash flows also, which we'll discuss later. So then year 2. So similarly, year 2, the sale is 8 crore 18 lakhs. Again, we have done a monthly breakup of that in my Excel sheet. Okay. So here, what I've taken, I've increased the selling price of my computers. Okay, the desktops as well as laptops as well as workstations, because there'll be some increase. Okay, after 1 year. So So that maybe that selling price have been increased, okay, and the sale will also go up from 624 units of desktops to 1200 because I have a higher capacity, so I can sell more, okay. So the desktops will be 1200, laptops 750, and workstations 1500, which will correspond to a sale of total sale of 8 crore 18 lakhs. Okay. And then we can just move on to after putting, because I've already put the formula as far as the cost is concerned. So the cost numbers will get automatically populated. So that means I'll be making a gross profit of, and I've assumed that a company is making a gross profit of, there is no change in terms of the gross profit. Okay, fine. So if you suppose you have to want to write the gross profit margin, so we can just add this also. Fine. So what I'll be doing? Gross profit divided by sales. So 36%. So if I copy paste all this for all the years, so it is coming to, so these are blank columns, so I'm just going to, so the company's is profit margins are not getting changed. So that's again a very simplistic assumption. The company is maintaining the same gross profit margin for the whole 5 years. Okay. Normally, companies always make different types of the gross profit margin can change because the company costs go up and company is not able to pass on the selling price. They can't increase the selling price of their products, so the gross profit goes down. Fine. Suppose the company is selling the goods and the costs are going up, okay, but they're keeping the selling price the same, so the cost will come down, isn't it? So the gross profit margin will go down. Okay, usually the companies are not able to increase the selling price. Fine. So here I'm assuming that the company is increasing their sale price and most of the costs are actually linked to my sale itself. So that's why I'm getting a similar gross profit margin every month, every year. So then the sales and personal expenses. So I have kept some increase every year, 5 to 10% in each category, and some of the expenses are linked to sales, like selling and personal remuneration is linked to my sale. 5% of my sale will be I'll be spending on my personal remuneration expenses. Okay. So similarly, I've kept some changes. So which means that every year my profits are going to go up. If I show my projections, so EBITDA was 30 lakhs. So this company was EBITDA positive from the day one. Only it was PAT negative. Okay. So then next year it is 1 crore 54 lakhs because company has just started doing business, so they have a lot of capacity. Okay. Even at this type of capacity level, the company is using capacity utilization of 81% for desktops and 91% for the desktops and laptops, and 92% for the workstations. So I just calculated, the company can always sell more and more because company has the capacity. Okay. So let's go ahead down to the EBITDA level. So EBITDA level, company is making a profit of 3 crore 73 lakh 66,000 in the 5th year. So this is the projection. Every year the EBITDA is growing. What is the full form of EBITDA? Yeah, and depreciation. Earning before depreciation, interest, and taxation. Okay, so company is EBITDA positive right from the day one. So then what I've done is that after charging the depreciation, we come to EBIT level. So this is called EBIT, earning before interest and tax. So this is also called the operating profit of the company. Okay, that means how much profit the company is making by selling its products to the customers. Okay, whatever it is in the business, whatever profit which is generated out of doing that business, okay, will be reflected as EBIT, operating profit of the company. Okay, normally the EBIT will not take into account any abnormal incomes or other incomes. Okay, if there is any other income which is normal in nature, we can include. Okay, otherwise it will not be. So EBIT will be pure operating profit of the company. So first year the company was in loss and subsequently company is in profits. So then we have the interest is reduced. Then we have the at EBT, so company is in loss in the first year. Okay, then company starts paying taxes from the year 2. Now here, what happens is the tax rate is 25%, which is normally which is equivalent to the current tax rate in India for companies, which is around 25%. But there can be a question here that in the first year the company has made a loss. Okay, will be company entitled to carry forward the loss, and it will reduce the tax of the company in the next year. So that is allowed in India. So if a company has suffered a loss, okay, so that loss can be set off against any tax liability in our future years. But I haven't done that. Okay, so we can always do that also to make the calculations a little bit more, near to the reality. So I'm assuming 25% tax. So which means the company is going to pay a tax of how much? 17 lakhs. So company's profit after tax will be 52 lakhs, 88 lakhs, 1 lakh 41,000 and 2 crore 16 lakhs. Is that clear? Okay. So then there is a column for accumulated profits, because this figure is required for our balance sheet purposes. So accumulated profit is 1 lakh 88,000 148. How this number has been arrived? Savya? ये figure है 1,88,000 accumulated profits, which is basically because companies made a loss in the first. Loss के वो 52 lakhs कर दिया. So similarly, the accumulated profit will keep jumping as the company is making more and more profits. Okay, fine. So this will go to the balance sheet. So let's go to the balance sheet and look like how does it look. Okay, so this is the balance sheet. Now here, what we have assumed, that there is no working capital requirement for the company. So that I have also introduced now. Okay, so I'll just show you that. Now I'll just take you to a statement here first. Okay, go to balance sheet. Fine. So all the numbers will automatically pop up as soon as you put all the numbers. So your balance sheet will be all tied up, and at any given time you must check up whether you're getting true. Anywhere it's not getting false. Okay, so that means the assets will match the liabilities of the company. Okay. So now what I have assumed here, basically, if you go to okay, so what I'll do, I'll just open another file where I have calculated the working capital. So let's first look at without the working capital. Okay, with working capital and business plan inputs. So I'll open this one. Okay. Fine. It's getting open. Okay. So I'm just looking at this. So this is not containing the working capital. So I'll introduce the working capital in my next stage. Okay. So just look at the balance sheet of the company. You'll understand. First year, before the company started its operation, a year prior to that, which was 31st of March 2021, where the company has not done any sales. Okay. Company cash balance was 5 crores. 4 crores the company has taken a loan, 1 crore equity. Okay. So company's total asset is 5 crores. Now, from where the company has got this money? 4 crore from loans and 1 crore from equity. Okay. So which means the total asset is equal to total liabilities. Now, in the next year, company's cash balance has come to 95 lakhs, because company has purchased a lot of machine equipments, and there is some cash loss also company has incurred. Okay, because the company cost is more and company is not in profit, because company is PAT negative. Okay, if you look at, for example, here income statement, so company is making a loss of what, 50 lakhs. So company's income is less than the company's expense. So this will eat away the cash also of the company. Okay, because company has to pay salaries and everything, all expenses we have booked. Okay, so in the balance sheet, the cash bank balance has come to 95 lakhs. Okay. Fine, and we can even recalculate also how this cash balance has arrived, but that is the later part of it. Then fixed assets, 4 crore 54 lakhs. So why it is showing 4 crore 54 lakhs? Why not 5 crores? आपको समझ गया? हाँ, depreciation. So people have all gone into these sheets, okay? काफी काफी मेहनत करी है. So that's why you're able to answer my questions. So अच्छा, because I wanted that you should struggle with the numbers, then only you'll come to know. Okay. So this is the fixed. So similarly, you can see the cash balance is also changing. What is the cash balance at the end? 7 crore 94 lakhs. It's a huge cash balance. Fine. The cash balance is very high. So that means we'll see how this cash balance can be reduced, and the projections looks more realistic in nature. Number one, company, will introduce the concept of working capital. Second, the company can pay some kind of a loan also, repayment, or some kind of a dividend also, which can take away the cash from the company's balance sheet. Okay. So total assets is this, which is basically, the profit the company has made. Okay. Fine. So this cash balance can also be, you can even find out how this cash balance has arrived, because company is profitable thereafter. So profit will increase the cash balance. So whatever cash balance you started with and whatever you have spent and how much profits you have made, if you add up, you will get the cash balance. Okay. We will look into that later. So company's long-term loan. Company has taken a loan of 4 crores, then took another 1 crore loan right at the beginning. So total loan is 5 crores. Is that okay? Then company has an equity capital of 1 crore, so which will remain the same. Now all this profit or loss account becomes the reserve and surpluses of the company. So it is shown as profit loss balance. So this is all accumulated profits. So company's reserves is at the year end is at the year 5-year end is 4 crore 48 lakhs. So that means the 1 crore capital has now touched about 5.5 crores, including the reserves and surpluses. So this is the money which the company has. Company has not distributed this money as dividends. Okay, fine. So company liabilities, if you see, the assets and liabilities are all matching up. It's a simple version of a projected profit loss account. Is that okay? Now we can even see the cash flow statement. Okay, the cash flow statement will look like this. In the year one, company got now cash flow. There are three divisions of the cash flow. Are you aware of that? क्या क्या होते हैं? Very good. So अभी first year में क्या था? There was only financing activity. Company has just got 5 crore rupees. 4 crore from the loan, another 1 crore there was an equity. So that means company got 5 crore. So there was nothing on account of operations. There was nothing on account of financing activities was there. So 5 crore. आगे ये ठीक है? अब next year देखते हैं. So opening balance, the cash balance was 5 crore. So this was the cash which the company had. Now company suffered a loss of 50 lakh rupees. Okay. Then depreciation has to be added back because it is not going to take away cash. Similarly, interest on borrowing will be shown as cash outflow from financing activity. So that's why we added here. So cash provided to operation was 30 lakhs 44,000. Is that clear? So what we take? We take the profit loss account, take the profit or loss, add the depreciation to it, and minus any financing outflow, which is on account of interest. So we are left with cash provided by from operations. अब हमारे पास सिर्फ cash flow from operation आ गया है. कितना आ गया आपके पास? 30 lakhs 44. Why the cash flow? There is a positive cash flow from operations, despite the company is not making profitable. Answer me this question. Company is not profitable, but company is still, हाँ हाँ profit में था. Before depreciation, company is profit. So there is a cash company has generated from the year one. The company has actually generated a cash. Okay, so it is not going to eat away the cash balance. It is going to add to the cash balance of the company. Okay, fine. Is that clear, Savya? देखो आपका cash flow from operations क्या है? 30 lakhs 44,000. Fine. Of course, there is one item which is appearing here, which is interest. हाँ हाँ, ये इन दोनों का माइनस जो होगा वो कैश बैलेंस कम हो जाएगा हमारा सिर्फ. Okay, that should reduce the cash balance because interest has to be paid to the bank. Okay, we are not accounting in interest into my cash flow from operations. So company has made cash flow from operations positive, which is 30 lakhs, but company has also incurred expenses on asset purchase, and they got another borrowing of 1 crore in the second year, first year itself, and interest on borrowing. So cash used for financing activities. So there's a positive 65 lakhs. So 1 crore was a bank loan, 35 lakhs they paid.
तो 1 करोड़ इक्विटी थी 4 करोड़ बैंक लोन
नहीं, ये 1 crore तो लोन है, टर्म लोन है,
अच्छा नया
ये टर्म लोन है, and this is this same interest on borrowing. Fine. So this is actually going out. So from financing activity there is an outflow of 65 lakhs. 1 crore company took an additional loan, 35 lakhs they paid as interest. So net cash inflow is 65 lakhs from financing activities. Okay,
नहीं वहाँ ऐड बैक
यहाँ ऐड हो रहा है,
वहाँ ऐड बैक
इधर हम ऐड कर रहे हैं because it has been shown as a financing activity, not from operations. Okay, fine. So there is a decrease of cash of 4 crores. So the cash balance has gone down to 95 lakhs, which was 5 crores at the beginning, but now come to 95 lakhs because company has spent 5 crores on buying assets. Okay, but they got another 1 crore as a loan, but they paid 35. So net the cash balance is now coming to 95 lakhs. So we start with the 95 lakhs. अब आपको ज्यादा समझ आएगा यहाँ से 95 lakhs cash balance है. अब यहाँ देखिए कंपनी की नेट इनकम कितनी है, 52 lakhs, which is coming from the profit loss account. Okay, depreciation 50 lakhs, it has to be added. This 30 lakh 5 lakhs interest again added. So cash flow from operation is 1 crore 37 lakhs. Now there is no investment activity. Okay, only financing activity, company is paying 35 lakhs. So minus, so that means increase in cash has gone up by 1 crore 2 lakhs. अब जो कैश बैलेंस है वो 1 करोड़ 2 लाख से बढ़ गया इस साल. ओपनिंग बैलेंस कितना था, 95 lakhs. So that means closing balance is 1 crore 97 lakhs. If you look at this, this was the cash inflow. This was the balance in the beginning. So this plus this comes to 1 crore 97 lakhs. Is that okay? समझ में आ गया? Should I explain again? रिटर्न कर देंगे तो कम हो जाएगा. फिर then it will come here, financing activities में, it will be coming minus here. So what I've done, I've made this template. Now we can always make some changes and bring it to more realistic look of what it is. Basically it's just to explain. Otherwise things would have been very complicated and added, so that it will be very difficult for you to understand. So I added one more complication, which is working capital, which I'm going to show you now. Okay, fine. So company's cash balance is 1 crore 97 lakhs. अब यहाँ आते हैं. Now just be ready for some questions. So opening balance is how much? 1 crore 97 lakhs. Okay. Now company's net income 88 lakhs. So this is your net income. PAT after paying all taxes, everything, it is 88 lakh 30,000. Then depreciation is added. Why it is added? Because it's a non-cash. Then interest on borrowing company is spent, but we are adding here. Why we are adding? Why we are adding? Is not part of the operating activity. It's part of the financing activities. Okay, very good. So cash provided from operations is 1 crore 73 lakhs. Then 35 lakhs is the borrowing, which the company is paying interest. Okay, fine. So that means the cash will come down to 1 crore 38 lakhs. So there was a surplus cash from operations, which was 1 crore 73 lakhs, but it was taken out, 35 lakhs was paid as interest. So that means the total cash balance increase is 1 crore 38 lakhs. So company started with 1 crore 97 lakhs. Now add to it 1 crore 30 lakhs. So that means company's cash balance will go to 3 crore 36 lakhs. Is that okay? Now coming to the fourth year. Company's opening cash balance is 3 crore 36 lakhs, which is basically the closing balance of this year. Yeah? Okay. Then company has made an income. After paying all taxes, company is PAT positive 1 crore 41 lakhs. 1 crore 41 lakhs, 89,000. Okay. Then depreciation, we have assumed for simplest reason that all is 10-year depreciation straight line basis. We can make all changes. You can make some assets which are for 3 years, which are, life is 5 years, 10 years, so the depreciation may change. Okay. Or we can make it written down value. Depreciation may come down year by year. Okay, so we can make all those complications. It is just to keep the, so that you can understand. Okay, then interest on borrowing 35 lakhs. Company has taken 5 crores of loan, 7% interest they are paying, so it comes to 35 lakhs. So that means cash from operations will be 2 crore 26 lakhs. So year after year, companies, cash from operations are going as companies selling more and more products at a higher price also. Okay. So now companies outflow is only account of finance. So that means the total, there will be further increase to the cash balance of 1 crore 91 lakhs. So which means the cash and bank balance will go up to 5 crore 28 lakhs. Okay. Then we start with the same cash balance at the year end next year, the 5th year projection. So net income, company is PAT positive, 2 crore 16. Then depreciation and interest on borrowing similar. So interest why excluding, because shown as separately. Okay. So we have a cash balance of 7 crore 94 lakhs. So that means company is sitting with huge pile of cash, with this business. So now what I will do is, so I'm just going to close this, okay, and open up the other file. Okay, this is business. This also I'm going to close. This is with working capital. Okay, so I'm going to open the working capital also with working capital. Okay, अब इसको सुनो, because this is something new. So then they'll have a little bit a break after that, after we complete this. Okay. Now I'll just take you to the balance sheet. So look at the balance sheet here. ये बड़ा important है, please focus here. Now what I have done is, I have assumed that company, whatever company is selling, okay, it is giving a credit to its customers. Okay, company is not going to collect all the money upfront. So account receivable is basically 68 lakh 19,000. So from where I picked up, it is coming from T6 sales plan. Okay, T6 sales plan, T6. T6 कहाँ है? Okay, let's go back to, एक second, वापस देखते हैं. Balance sheet, okay. So let's go to balance sheet, and this is T6 sales plan, T6, T6. A B C D E F T. Okay, ये हम actually क्या है ना, we are looking at, we are, हाँ, August देख रहे थे हम actually, so we should not look at that, we should look right at the beginning. वो actually it's moved to the, okay, so accounts receivable are 52 lakhs 50,000, okay, which is your C6 into 2. So that means I'm saying 2 months sale will remain with the customer. Whatever I'm going to sell for 2 months, the company is going to pay me, my customer is going to pay me after 2 months. Okay, so my sale is 52 lakh 52,000. Okay, let's see, go to the sales to C6. Okay, so C6. So sale is how much? 26 lakh 25,000 total sale. If you multiply it by 2, it will come to 52 lakhs. Okay, so there I have taken here in the balance sheet. So it is sales plan C6 into 2. So whatever is my monthly sale, I have multiplied by 2. So which means 2 months sale will be always equivalent to my receivables. So that means this much of money I am going to have to recover from the customer always. Have you got it? Just listen to me again. What I am saying, that whatever sales I have done in April and May, I won't be getting that money immediately. Okay, fine. So अब यहां पर क्या होना चाहिए, एक्चुअली इसमें थोड़ा करेक्शन होना चाहिए, क्योंकि अप्रैल में तो 1 महीने की सेल ही होगी, तो 1 महीने का रहना चाहिए. ओके फाइन. सो आई नीड टू मेक अ करेक्शन हेयर. ओके सो देयर इज अ करेक्शन, बट नेक्स्ट मंथ के हिसाब से तो सही हो जाएगा. ओके सो हेयर व्हाट आई हैव टू डू इज आई हैव टू मेक इट आई हैव टू पुट इट लाइक दिस. पहले महीने की सेल मैंने, कस्टमर्स ने हमें पैसा नहीं दिया. इज दैट ओके? First month, whatever I sold, customers have not paid the money to me. Is that okay? Next month, again, previous month plus this month's sale, I have not got the money from my customers because I have given 2 months credit to them. Is that okay? जो पहले 2 महीने की सेल है, my customers have not paid anything to me. It is lying as receivables. Okay. First month, full sales. Second month, 2 months sale. Then now it will remain constantly the same figure. Okay, because my sale is same, so I will always have 2 months receivable in my balance sheet. That means I have to recover whatever I've done sales in this month as well as the previous month will remain tied up into my customer's account. So that means I have yet to collect that amount. Is that okay? Have you followed it? Who has not followed? Please raise your hand who has not followed. एक बार दोबारा. So आपको आया समझ में आ गया? लेकिन आपका तो चेहरा तो ये बता रहा है कि मुझे नहीं आया समझ में. ओके, कोई इतना स्माइली फेस नहीं था, ऐसा लुकिंग नहीं आया समझ. Savi, have you understood? Yes. Should I explain again? There at the back. So I am assuming again to reiterate, I am assuming whatever I sale I'll be doing for 2 months. Whatever sale I do, I'll not be getting that money. Okay, so at any given month, I'll have 2 months outstanding in my receivables. Okay, so I've done a mistake here. Fine, I'm not correcting it because it will change my balance sheet. Okay, fine. So I'll make a correction later on. So, so that means this is my receivables. Now next year, what I have done is I made 1 month. Now initially when the company started, it was offering 2 months, kind of a credit to the customers. Now company has become a little older. Okay, so it will say now we are going to bring it down to 1 month. Now company can offer 2 months, 1 month, 1.5 months. It's their prerogative. If the customers are willing to accept the credit terms, and if the competitors are also doing that, if the competitors are offering 3 months credit, the company has to also give 3 months. Okay, if they have to remain in the competition, it is decided by the competition, not by this company. Okay. Now suppose all the companies which are there who are selling similar products, they are offering only 1 month credit. All the competitors this company. So it is going to initially, first year they are offering softer terms, but now they have moved on to a 1 month credit. So we'll presume that. So 1 महीने की सेल जो है कंपनी की हमेशा क्रेडिट पर रहेगी. And then I have assumed for the 5 years the same thing. Is that okay? Fine. Now let's go to inventory. Now this is basically on the basis of my sales. Now inventory will be on the basis of my cost of sales. देखो क्या है कि I have to keep some stock also with me. Whatever I produce, I have to keep some stock with me. So what I have presumed that whatever I'm producing for every month, I'm keeping some inventory. Okay. So what I've done, I've linked to C22, which is my cost of goods sold for April. Okay. If you go to April and look at sales here and look at the cost, it is 26,25,000. So this much of goods I have produced. Okay. So this much will always remain with me in my inventory. Okay. Fine. So I've added this inventory here. Okay, so this is, if you go back to the profit loss account, okay, and look at, the cost for April. So it is 16,74,000. Okay, 1 month, because the inventory has to be valued at cost. Fine. इसका simple logic क्या होता है? The inventory will be whatever goods I have produced. Okay. Okay. So the cost of that will be shown as inventory, not the markup included. Okay. Fine. So let's go to balance sheet again. So it should be 16,74,000. It's getting 16,74,000. Is that okay? 1 month inventory. Now when I was looking at the sales, and calculating receivables, I was looking at the selling price, sale, and 2 months sale was still lying with me as always my receivables. But when I'm looking at the inventory, that means the finished good inventory which I'm I'm selling. Okay, I'm making desktops, laptops. So that will be based on the cost of goods sold, not on the sale price. Okay, is that okay? Have you got it? हाँ दोबारा सुन लेते हैं. You know, I'll explain that on the board also later on after I finish this. Whatever, if I say I'm keeping some inventory, inventory is what? I'm keeping inventory of finished goods, desktop, laptops, and workstations. Okay, so that 1 month inventory I'm keeping all the time with me. Whatever I'm producing, I'm keeping 1 month with me because I have to, supply to my customers. I should have some stock with me all the time. Okay, so inventory has to be there. Otherwise, if I don't have the inventory, that means I have to produce and sell immediately, and I'll be having a zero inventory. Of course, the company would like to maintain zero inventory because that means involving, a financing of all your working capital. So, but company has to keep some amount of stock. So it is saying that it will keep 1 month stock of workstations, desktop, and laptops, and they will be shown at the cost of goods sold price, at the cost. Okay, not including the margin. भाई जितनी कीमत है वही तो खर्चा हुआ है ना मुझे. So I'm going to show that as an inventory, not related to the sales. एक महीने की sales नहीं कर रहा, एक महीने की cost ले रहा हूँ. Is that clear? So inventory is always valued at cost. Remember that when we are valuing inventory, it has to be valued at cost. Or, of course, there is an accounting standard for that issued by the Institute of Chartered Accountants, which says it has to be valued at cost or net realizable value, whichever is lower. Okay, fine. So, in case if suppose if all these things which I'm producing they're damaged or they are not able to sell all those, then I have to value at a lower price. But I'm assuming that they're all good stock, okay, and their realizable value is higher than the cost. So that's why I'm valuing at cost. So I'm following the accounting principle, accounting standard, that there is no damage. These goods will be, at higher than net realizable value because I will be able to sell them at the selling price. Okay, fine. Is that clear? So now inventory. Now coming back to the last one, which is called the accounts payable. Okay. Now what is accounts payable? What I have done is basically that I am presuming that I will be having 2 months creditors in my books. That means whatever, I'm going to produce desktops, laptops, workstations. So I'm going to buy material for producing that. Okay. So I'll be, going to my suppliers and getting the raw material for all these things. Okay. I'll be incurring all the cost. So I'm saying that 2 months cost attributable to my product will be always be outstanding from my side. I have to pay it to my suppliers. Right? Like, when I'm selling to my customers, I'm offering them 2 months, credit period in the first year. So I'm saying at least, I'm dividing by 2. That means I'm keeping 15 days, payables. So I have to make a payment to my suppliers for the material which I'm buying. So I should be having some payables also. Okay. So that is coming out to be how much? 8,37,000, which is just the half of my cost of goods sold. Okay, is that clear? इतने के तो मेरे payables हमेशा रहेंगे because I have to make payments to my suppliers for whatever I'm procuring goods and making those products of laptops, desktops, and workstations. Is that okay? So I have added this. Now after adding this, what I will go back to my working capital sheet. Okay, this. So now this includes my all others are same. The profit loss account, everything has changed, remains the same. Only the change will happen in the balance sheet and uh, only in the balance sheet. Okay, fine. So let's look at the balance sheet and the cash flow. So हाँ inventory का half लिया जो क्योंकि inventory is what I am going to actually that is the things I am going to buy from outside ना. There can be two things. I can produce all the goods myself, or I can buy them and sell it. I can buy laptops, desktops, and get it made from someone. Okay, I can choose a vendor who is going to make all these things for me, and I'm going to brand them and sell them. Or I will be producing. I'll be buying all the things, computer parts, everything. okay, wood, everything, and making, you know, those workstations, everything, and selling it. Fine. So that means I'll be buying all those things from my supplier. So I have to make a payment to them. So since I'm buying, I'm also, you know, seeking a credit from them. So I'm having a half month's credit from the goods which I have purchased from my suppliers. Is that okay? Up now, it is very important. Look at this. Now, my cash balance was 5 crores. Now here, what I have done? Look at the top of the formula. There is a minus sign there. How much minus sign? 6087,373. वो क्या है?
60 lakh 87.
हाँ, ये अगर हम इसको नीचे वाली शीट में जाएं तो दिस इज 60,87,000. What is this? This is basically the accounts receivables, the inventory. This is the money which is blocked. Minus 8,37,000. This is the current assets minus current liabilities. Okay. So this is my net working capital. Okay. So if you look at the formula, it is C5 plus C6 minus C18, which is, you know, receivables minus plus inventory minus the payables.
Net working capital.
So this much of money I have blocked. Fine. So it will reduce my cash balance here, which will be now the cash balance will get reduced by 60,87,370, which is reflecting in my formula. I am not done in my, you know, I just pick the same balance sheet here and reduce my this thing. And if I just check my cash balance there, in my balance sheet will be same. How much it is? 34 lakhs for 56,000. Okay. If I go and check my cash balance here, it should be the same here. Okay. So what is my cash balance here? 34 lakh 56,924. Okay. And it is 34 lakh 56,924. Since I've used the old, you know, template in my this master sheet, I'm reducing the cash balance here because I've not used the link from there. Okay. Link is coming. This link is from the old Excel sheet. Here I've just added the working capital. Okay. So what I've done, I've just reduced it from my same template. Okay. Have you got it? इसको मैंने इसलिए करा है because I've just preserved the same template without working capital. I've just added the working capital template here. So that's why I've not, if I would have linked to my Excel sheet, I would have, there was no need of reducing this balance by 60,87,000. It would automatically come. Okay. Now, तो आपका बैलेंस कितना हो गया 34 lakhs. अब बैलेंस कितना आ रहा है आपका 6 crore 5 lakhs. It was coming 7 crore something. Remember? इसको हम देखो, हम वापस चलते हैं यहाँ पर. ये इसमें क्या हुआ 1 crore 89 lakhs. How it has come? I'll just show you. You know, the working capital is at the end is 1 crore 89 lakhs. What is the working capital? Account receivables, account inventory, and accounts payable. 45 lakhs. So what is total amount which is blocked in my working capital? 1 crore 89 lakhs. Because my working capital is increasing year by year. As I'm selling more and more and more and more, so that means I have to recover more and more from my customers. Okay, fine. So every year the working capital is going up. First year it was 60 lakhs 87,000. Next year it became 89 lakhs. So that means there was an increase of working capital 29 lakhs. ये बड़ा important है. You know, my working capital in the first year, my cash eaten by my working capital was how much? 60 lakhs 87,000. Next year, how much cash eaten was? 29 lakhs. Incremental cash eaten.
Incremental.
Or overall cash eaten was 89 lakhs. Okay. Uske next year, my working capital has gone up to 1 crore 12 lakhs. So additional incremental cash eaten in this year is 22 lakhs 26,000. So then in the fourth year, another 32 lakhs 46,000 was in it. You know why this figure is growing up? The increase in working capital is going up gradually. Even the increase. Why? Because sales बढ़ रही है. So my receivables will keep increasing. My inventory will keep increasing. My payables will also get increased. So the net impact is that still I'm getting up a kind of increase in working capital every year. Okay. Overall, my working capital has gone up to 1 crore 89 lakhs. So since in my cash, I have shown a minus of 1 crore 89 lakhs. So what was my balance before I introduced the working capital? So that cash balance is coming from the first statement where I have not shown the working capital. So I have to reduce it by 1 crore 89 lakhs. Is that clear? ये समझ में आ गया आपको? Is it clear? Okay. So now I go to the cash flow statement. This is very important. Now, since my cash balance has also gone down, so it will get somewhere reflected in my cash flow also. अब वो देखते हैं कहाँ आता है. ये देखो increase in working capital. So there is a column here, increase in working capital. आपने जब भी cash flow बनाया होगा, तो cash flow from operation में if there is an increase in working capital which is going to eat away the cash, will reduce the cash balance. So this explains the whole concept of your cash flow from operation. So हर दिन में हर हाल में cash का working capital बढ़ता जा रहा है. Have you got it? ये बड़ा important concept है. Please understand. If you look at here, increase in working capital, it was 60 lakhs. This was my sum total of receivables, inventory minus my payables. But next year, my receivables, inventory have gone up, and so is my payable gone up. The net impact is 29 lakhs. So this much of money is getting reduced from my cash balance in the second year. Third year, it is 22 lakhs. Then 32 lakhs and then 44 lakhs. Okay. So this is my increase in working capital. So cash provided in operations will become now a change number. Okay. So if I look at this number here, so my cash balance is 6 crore 5 lakhs at that. पिछली statement में हमने देखी थी without working capital was 7 crore 94 lakhs. Just to check. In my earlier statement, I've shown a cash balance of 7 crore 94 lakhs. So that means how much cash has gone out on account of working capital? 1 crore 89 lakhs, which is nothing but the value of my receivables, assets minus my liabilities. This is tied up. My balance sheet is tied up. Is this clear? People don't understand because this is the most important thing. The working capital. If there is an increase in working capital, if there is a decrease in working capital, will it increase the cash balance or decrease the cash balance? अगर suppose working capital कम हो जाएगी किसी कंपनी की, तो cash balance बढ़ जाएगा या कम हो जाएगा? बढ़ेगा. अगर working capital बढ़ती है, तो cash कम होगा. अब इसमें क्या होता जा रहा है? Increase in working capital होती चली जा रही है. Okay, कहाँ है? इंक्रीज इन वर्किंग कैपिटल से कैश बैलेंस गिरता जा रहा है. जैसे आपकी वर्किंग कैपिटल बढ़ती चली जाएगी रिक्वायरमेंट दैट इज मोर एंड मोर मनी इज गेटिंग टाइड अप इनटू तो कस्टमर्स अगर आप कस्टमर पे नहीं कर रहे हैं तो कैश बढ़ेगा कम हो जाएगा. कैश बैलेंस बढ़ जाएगा. कस्टमर बढ़ते जाएंगे आपकी वर्किंग कैपिटल बढ़ती जाएगी तो आपकी कैश बैलेंस बढ़ जाएगी. तो आपको विल गेट मोर कैश फ्रॉम द बिकॉज़ ऑफ मोर प्रॉफिट्स बिकॉज़ ऑफ मोर सेल्स. But if your inventory goes up, okay, if the inventory goes up, will reduce your working capital or sorry, will increase the cash or reduce the cash. अगर आपकी inventory बढ़ जाती है, cash बढ़ेगा या घटेगा? Suppose if you have you become cost conscious of the business sector, आप कितना से अपनी inventory कम करो? I'm keeping a 1 month stock with me. So now I'll be keeping only 3 weeks stock with me, and it's not going to affect my sales. So it will increase your cash flow. आपका cash बढ़ जाएगा, in good city, right? So this is what I am trying to make you understand. Is that clear? Yes, absolutely. ठीक है, okay. तो अब इसको हम